Gold's up, $2. The dollar was up 40. The dollar was up 40 last night on the highs, and gold was down like $3, $4. And silver was down 60, 80 cents. The silver market is, again, being sold on the back of dollar buying. Look, gold buying. No one's going to sell gold until the events are over, which should make you be aware that something could happen when the events are over. And that'll be a dip to buy if you're a fundamentalist in the gold market. So in the meantime, silver lower is a gift. Unless copper cracks, I don't see why silver's 40 cents lower, except so someone else can buy it.
The precious metals market has recently witnessed significant movements, particularly in silver prices. During a recent trading session, silver encountered sharp selling pressure above the key resistance level of $31, ultimately retreating to around $30.50. While silver often stands in the shadow of its more prominent counterpart, gold, it has consistently demonstrated remarkable resilience and strong growth potential. VinceLanci, a seasoned commodities trader and respected market strategist known for his insights, points out that while gold experienced only a minor dip, silver saw a more substantial decline of 60 to 80 cents. He attributes this divergence to the silver market's apparent sensitivity to dollar buying, contrasting with gold's relative stability in the face of these currency movements. The veteran trader elaborated on gold's position, noting that the yellow metal gained $2 despite the dollar strengthening by 40 points the previous night. Lanci further noted that gold saw a slight increase of $2, while the dollar gained 40 points the previous night. He emphasized that sellers are unlikely to part with gold until major market-moving events conclude, which could present a buying opportunity for fundamental investors in the gold market. These insights align with broader currency market trends. The US dollar has experienced its third consecutive weekly decline, a trend that followed a larger-than-expected 50 basis point rate cut by the Federal Reserve. This dollar weakening typically bodes well for commodity prices, including precious metals. Goldman Sachs Group Incorporated has issued a bullish forecast for gold, predicting that the precious metal will soon reach record highs. This optimistic outlook is driven by expectations of increasing inflows into bullion-backed exchange-traded funds, suggesting growing investor confidence in gold as a safe haven asset during economic uncertainty. Before diving into this video, subscribe to our channel and hit the bell icon to stay updated.
Gold up, the daily up. I mean, after last week, how can you not have a retracement? And we're not. I think the takeaway from this morning's activity, especially last night, gold's up, $2. The dollar was up 40, right? Here, I put that up there. The dollar was up 40 last night on the highs, and gold was down like $3, $4, and silver was down 60, 80 cents. And I think the silver market is, again, being sold on the back of dollar buying. Look, gold buying. No one's going to sell gold until the events are over, which should make you be aware that something could happen when the events are over. And that'll be a dip to buy if you're a fundamentalist in the gold market. So in the meantime, silver lower is a gift. Unless copper cracks, I don't see why silver's 40 cents lower, except so someone else can buy it. After the Fed announcement and GLD's close, and after the market had washed out on Fed Day, new highs and then washed out, profit taking. A significant chunk of gold 3,000 calls traded OTC, and we put it in context in a mini pod. So we caught this and threw it up. Again, that may have also come from someone else. I forget now, but we did a lot of follow up on it. All right, moving on. So those are three news items. In the market news itself, you could just read these stories yourself. But there seems to be an overwhelming mention of chip manufacturing. There's one that I don't have in there. Apple is making chips locally. You've got Intel. People are investing in Intel. They're not going to let Intel go bankrupt. We're going to be building chips in the UAE, so that'll help their region, but at the same time help our economy. That's all part of cross-pollination. You're going to see these are real stories. You're also going to see a lot of them coming to the election because it's going to promote Build Back Better, or whatever he's calling it. Politics, geopolitics, government shutdown circus is about to begin. Get ready for it. Here we go. It happens every year. The data on deck will be inflationary focused now. So is inflation reemerging? And it's probably going to be reemerging. The other focus, it's a minor focus, but it'll be there, will be if economic data is really, really weak, then the market will start to want another 25 basis point cut. So just keep that in mind. That's the market's expectations.
VinceLanci identified two crucial levels of concern regarding potential sell-offs linked to overbought conditions. $30.80, which may support a rebound if maintained, and $30.60, which was previously broken, but is now above that level again. Despite this breach, Lanci views the current position as a positive indicator for silver. Contrasting with the short-term caution, analysts at UBS present a more optimistic long-term view for silver. They predict that silver prices are set for further gains in the coming months, citing favorable macroeconomic conditions and robust demand fundamentals as key drivers. Based on these factors, UBS analysts recommend that long-term investors consider increasing their exposure to silver. They have set an ambitious target price range of $36 to $38 per ounce, significantly higher than current levels. However, Lanci cautioned that he would not expect silver to hold if it dropped below these critical levels again during the day. He pointed out that the market seems to have worked off some of its overbought conditions, indicating that it may have peaked and is now beginning to trend downward. Let's get back to the video.
That time frame, quick comment. The question was raised, how does silver look, generally speaking, amongst the participants? And the comment I had made looking at an hourly chart was the following. We were here, and I said we looked at the MACD, and the MACD hourly was working off being oversold. All right, it was working off being overbought. Sorry, right. And as you went up the ladder, the 2 hour, the 4 hour, the daily, it became more and more healthy. So the hourly looked very bad. The 2 hour looked semi-bad. The 3 hour looked, who cares? No one looks at it except me. The 4 hour looked good. The daily looked great. And the comment that was made, and that is holding so far, is I had two levels to be concerned with, meaning if the market needed to sell off to work some of that overboughtness off, as it was showing on the hourly. The first price I had was 30.80, which came in around here, a ledge, right? So if it held 30.80, the hourly could just be digested, be subsumed, and the market can go up again. The second one was about 30.60. Now, we broke that, and that's pretty bad. The second one came in right around in here, I put, right? And we broke that, but now we're above it. So overnight trading, I'm not going to say it doesn't count, but I'm going to say that it's healthy. I would not expect silver to hold again if it goes below here during the day. It has worked off. Here, I'll stretch this out for you guys a little bit. The working off the overbought looks like it may have crested, peaked, and now it's working its way down. This would be significant because then you could see the daily do its thing in the market and go higher. That said, the caveat is now we're looking at the 4 hour. This needs to turn, okay? Because if this is growing, right, you technical guys, then this is a bear flag. And until that 4 hour shrinks, this needs to be looked at carefully as a bear flag.
The current landscape for gold reflects a blend of cautious optimism and strategic opportunity. Analysts anticipate substantial gains for gold in the upcoming months, fueled by favorable market conditions. Predictions indicate that gold could reach new heights, potentially exceeding the $2,100 per ounce mark, alongside expectations of significant increases in silver prices. What are your thoughts on the future of silver prices? Share your insights in the comments below. If this analysis is helpful, please subscribe, and hit the bell icon for more updates. Thanks for watching.